Sup, you beauties? Day 19, day trading pre-market. Let's see what we got. I established new rules yesterday, and I'm gonna live by them today. Market looks like it's probably gonna open red again today. As of now, days early. Very early. Hitting the scans here. Nothing yet. Minute 40 in, we got no news. Two minutes and 40 seconds in, no news. News completes tumor regression, ATON. Oh, that wick wasn't friendly. It's only up 17%, so it wouldn't stuck at me. Oh, super convincing right now. All right, well, This price action kind of reminds me a lot of yesterday's that I was trying to trade. Where the bids are just kind of it's making a move upwards and then the bids just kind of falling out. Well, let's put on some Trader TV for now. Why do we have no volume? Still have no volume. I tried trading. I tried changing my OBS settings to 1040 or no, 1080. So we'll see if it works. But I can't get my. This is a pretty good laptop. Legion Lenovo gaming laptop, and I can't get my encoder to show up on OBS, so I don't know if I need to disconnect. Yeah, this is the Legion Pro 7. I don't know if I need to uninstall OBS and then reinstall it or what, but right now it's dang, just play the. There we go. Let's go.
Feeling that people are encouraged by the fact that they've got more market value than some of the hotels. But I would also say that with these numbers, I mean, if we just take a step back and listen to what we've heard from the airlines, listen to what we've heard from even the Avis car companies, how people are continuing to spend. I mean, I suppose this goes hand in hand with the overall travel narrative and story that we're seeing from all of these companies that things are holding up.
Yeah, and certainly, and KG, Sam brings up a really interesting point there about, some of these travel issues and also the announcement we got from the FAA in the midst of the government shutdown here. That could issue some travel disruptions here for customers of Airbnb with these bookings and some potential disruptions or fear of even booking the flight at all or doing a last minute, weekend away. If the shutdown continues, do you think that that's something that will come up on the call? Questions about how they plan to deal with that because we are seeing the ripple effects now.
Yeah, that could actually have an impact. They could also move prices higher to offset some of that, the demand concerns as well as the supply constraint concerns as well. That could also create a little bit of gyration for this stock. The bright spot here, when you're actually looking at the breakdown, it's not the core markets, it's not the U.S., it's not France, it's not Canada. It's Latin America. They actually just talked about the gross bookings, if you will, has actually doubled in Latin America. And that is where they actually saw a lot of the positivity for this earnings announcement here. Now, that's something that's not really talked about that much, but they have rolled out some new services, and it seems like there's a really massive uptake that's taking place there. And that could actually be an untapped market for them that they can expand over in the future, right? And maybe not rely so much on the U.S. and Canada, and maybe just focusing on just certain other segments of the market, like once again, Latin America. This is actually a really good report when they're talking about the international exposure and how much that actually drove top line revenue.
Yeah, and Sam, for the international numbers, I had read through some of the analyst notes coming into the report today saying that was going to be an important thing for them to see where their focus was in terms of international growth. But I imagine we'll get some more commentary on that on the call here. But as I'm saying that, Affirm now coming out, Affirm Holdings releasing their results. I'm going to pivot over to Affirm so that we can cover these. KG, I'm going to say goodbye to you and welcome in George Tillis to help us with these earnings. Kevin, thanks for being with us from Schwab Impact in Denver. And we'll welcome in George Tillis now. We've got two more earnings for you. Hey, George, welcome to the show again. We're going to got Affirm coming out here, so I'll give you some numbers. We've got their fiscal second quarter revenue coming in. This is their forecast here: 1.03 billion to 1.06. Estimates calling for 1.06, so that's going to be a miss for them. They're seeing their gross merchandising volume. This is their guidance coming in 13 billion to 13.30 billion. They are seeing their fiscal year gross merchandise volume, a very important metric for them, above 47.5 billion. They had previously already raised this to be above 46 billion. This is a very important metric for this company, making sure that they're doing that merchandise volume for a firm where they kind of sit at the cross-section of consumer credit and fintech innovation and payments. So that number, performing well, about 1.5%. Not a huge move to the upside, but, as we're just coming across here with some of this guidance they're offering us, George, what are your initial thoughts?
Well, I think first off, the transaction volume is critical for a firm because they essentially really don't take the financial risk being, a lender of other banks' money, and their partnership network and volume is extremely important because of the fact that they make their profits, which are small, on bigger volumes. So these numbers are extremely meaningful. I haven't looked at the EPS numbers. It looks like they just posted the EPS numbers just came in at 23 cents versus the 11-cent estimate, and then of course the sales came in quite a bit higher, being the estimates by 5%, about 34% increase when it comes down to sales. And right now, based on these numbers, quite a meaningful increase in EPS.
And certainly in that revenue number for that first quarter coming in at 933 million, that well exceeded the expectations for 844.3. Now, Sam, coming into this report, so much of the focus was on this gross merchandise volume number and where they were going to stand in a challenged environment here. As far as conversations you had or analyst notes that you saw, we are seeing a move to the upside now a little bit more strongly, about almost 5% here. What do you think the focus on the call will be here for a firm?
Well, I think it's really interesting. Just looking at these numbers, it sort of takes me back to a conversation that Diane was having actually with one of her guests earlier today about this company, and they were sort of talking about how this is going to be a really good barometer and sort of a health check on the consumer, because we've been talking so much about that lately with everything from the retailers to the fast food and the casual dining. So this is just giving us another sense of that off the back of obviously the credit card companies that we've heard from as well. They have actually been pointing out, which strikes me, the customers things that we've been hearing from about some of the concerns of that demographic actually having pulled back. Now, obviously, this is a company in the business of buy now, pay later, so interesting trends there as far as the consumer is concerned. But this sort of part of the demographics is also much more exposed to inflation, student loan debt, etc. And they were also talking about some of that payback fatigue. So I would say those numbers are fairly encouraging in that particular context, Marley.
All right, I'm going to pivot us now over to DraftKings. Shares moving sharply to the downside, down about 8% right now.
Oh.
Come across the wire. Their revenue for the third quarter coming in at 1.14 billion. Estimates calling for 1.22, so that is a miss there. Their average revenue per MUP here, I'm just pulling these numbers up for us, coming up at 106. Estimates calling for 105.40, so in line there. They posted a loss per share of 52 cents. Estimates were calling for a loss per share of 44 cents, so a more considerable loss. For their adjusted loss, they posted an adjusted loss per share of 26 cents, which also missed estimates for the adjusted loss of 21 cents. Adjusted EBITDA loss of 126.5 million. That loss is only expected to be 77.8 million. So very disappointing numbers coming out of DraftKings as they sort of miss loosely across the board here. Shares down 8%. George, thoughts as this is coming across? We talked earlier about this big headline that they put out about being now the official exclusive provider sportsbook for ESPN.
We did. That's a very positive news, article for DraftKings, but it really comes down to substantive customer growth, the profitability progress, as well as some guidance revisions. So at the very least right now, what do we see? We essentially see, misses in terms of adjusted EPS and sales. Again, the fractional misses on the sales, but that's essentially sufficient to create a situation where we see continual decline in this name, which has already been down about 23% in the last year. But again, the profitability profile was already very finite in terms of 25 cents EPS guidance adjusted for this year. So with this ratcheted down number for this quarter, it's probably, and again it could change based on reality, change the outlook for this year's earnings multiple, because right now it's already trading at 110 times prior to today's release, this year's earnings. And so there's a lot riding on the growth next year, which is expected to improve to essentially $1.09 on an adjusted basis for the next fiscal year. So if they move back one quarter, which again I surmise is the case right here, it's going to ratchet across the board the estimates for the next 4 to 6 quarters.
And George, they are revising those estimates down. They're coming across the wire right now. Fiscal year revenue expected 5.9 billion to 6.1. They previously said they saw 6.2 to 6.4. They're also seeing their EBITDA, adjusted EBITDA for the fiscal year, 450 million to 550 million. Previously saw 800 to 900 million. So some massive downward revisions there in terms of those numbers. Also authorizing an increase in their share buyback plan to $2 billion, and their monthly user number coming across right now as well, their monthly unique payers, that actually missed as well, 3.6 million. Estimates calling for 3.92. We're down 11% right now. Sam, we've not seen too many scenarios in this earnings season where we've seen these downward revisions sort of across the board in terms of their forecasting for the fiscal year and their guidance. How much punishment is there going to be here? Because we've seen punishment for far less.
Yeah, we've seen punishment for companies actually clearing the bar, Marley. But interesting move to the downside, as you mentioned, because I think previously at the top of the show we had said that this was actually the bright spot amongst the 4 companies that we've actually got you across here. We're seeing this reversal as part of the market reaction off the back of this. Yes, look, wouldn't you like to be applying the wall in this earnings call, certainly later today, because I think there's going to be a lot of conversations, particularly around the SPN deal that you mentioned at the top of the show, as well, being definitely provider now.
What happened to my
Also with respect
trader view clock?
market, which has been a big
There we go.
here
Weird.
as well, Kalshi and Polymarket. That's been a big conversation down here as well.
Matt Dash trader.
Particularly off the back of the recent developments we've seen here. I was also talking to an investor again over at 7 Investing earlier today, who really said that these companies do have an advantage in the predictions market because they're federally regulated,
10 minutes until potentially more news. No way. Tesla shareholders approved Elon's $1 trillion pay package. Dang, son. What's going on here? What happened to Trader TV?
All right, we're not cautiously optimistic, we're just cautious. Your first pick, though, is in the Mag 7, Microsoft. Walk us through this pick. All right, so Rick, where are we seeing these support levels that Jason's mentioning? And
Yeah,
if you are
Rick, tell
potentially
us, bud.
indicating to us there could be a potential move to the upside.
between these two extreme points here. You can see we had our highs that came in here near 555. That's roughly where we topped out once again, but crucially we did not make a higher high. So never what you want to see. It did translate into a rather swift down move here. The 500 level stands out. Old highs, lows, lows here as well, and it looks like we are on pace to break through that level here today. Now there's still plenty of time left in the trading day, but that 500 level sticks out as a point that many traders might have their eye on.
Got about 3.5 minutes.
Was our recent low point. That's our light green line. That could be a further supportive area to consider down the road. When we look at some of our other studies, you can see that the moving averages that are on this chart, yellow 21-day, orange 63-day exponential moving averages, so not quite the same as simple moving averages here. In this case, we have crossed below both of them. They're both starting to point downward. We have a very steep trend line angling down as well, starting with our recent highs. RSI has also fallen off a cliff here after a very short trip into the overbought area. We have crossed below the 50 midline. Look for a further crossover below the threshold of 30 into the oversold area for further signs of bearishness and potential weakness here. Finally, when we look at our other studies here, our volume profile study shows our point of control, our very thick red line there, comes in at about 510. That is the heaviest trading area. Again, not a great sign that we are starting to drift below that level here. The next significant volume area lines up right about near 470 or so. Now that's also where you start to get our -1 standard deviation channel and our purple 252-day exponential moving average. So 468, 470. A quick look to finally at our 5-year chart shows 468 was a notable old high point right there. You can see that was a point where topped out previously. So that really stands out as well in a longer term picture.
All right, 2 minutes.
$10 off of that 500 level that you highlighted there, and about $13 off of that heavy volume area that you just highlighted. But Jason, walk us through your trade here on Microsoft. Is this a long-term play, a short-term hold?
Yeah, so this is a long-term play. Again, cautious. We want to see if the stock can bounce here. Obviously, if it breaks down and starts to go lower, this trade will become null and void. But I think this is the area where you want to start thinking about picking up a long position. So I'm looking at the June 18, 2026 call option. The 320 strike price is going for about $78. It may be a little bit lower than that since the stock's been selling off. Break-even's around $398. You got 224 days. As a trader, you don't necessarily want to get too caught up in the short term. You want to think, where can the stock be 6-9 months from now? And I think that's higher. The other thing I want people to think about when they're looking at this is you never know when the bottom is in, but you
All right, I'm gonna pause Trader TV. Hold on 1 second. We got a minute. Hit the scan, nothing new. Minute 25 in, nothing new still. Minute 30, no love. 512.
Could be one area to watch that is just above our RSI had been trending downward for a while. Our last peak in the RSI very notably showed bearish divergence. Not what you'd want to see necessarily if you were bullish, a sign of slowing momentum here where price makes a higher close, but RSI is trending down. Nevertheless, still above the 50 midline though, so still more of a slight bullish lean. Finally, when we look at our volume profile study, this is a different situation than our previous chart. In this case, we're actually hanging on above that notable volume node near about 340 or so. So that's the
Okay, gonna give it a few more minutes and then it's gonna be it.
It's also the site of our teal linear regression line, our line of best fit, negative fair value essentially at 341 that some traders use. So there's quite a bit of notable support in that area. The resistance 375 is the mark to the upside.
All right, so we're at 356.47 right now with Broadcom, just slightly below the unchanged line today. But Jason, your last pick, you mentioned in part of your explanation for choosing Broadcom, you mentioned Meta and what happened to them post-earnings, but Meta is your final trade.
Yeah, well, I'm gonna tell you about Meta here in a second. The trade though with Broadcom, I like June 18, 2026 call options, 320 strike price. It's gonna cost you about 78. Break even $398. I think it can get back there. You got 224 days. The stock is healthy and it's benefiting from a lot of the capex from all these other companies. If we look at Meta though for the final trade, you know, the reality is Meta really took the biggest hit because of the one-time tax charge. So it was 15.93 billion one-time
Market
non-tax
gonna
tax charge
open
that
lower
really
again.
just obliterated the stock. If you look at the revenue though, it grew to 50.8 billion, up 26% year over year. So the company's making money. I love that it
All
doesn't
right.
really have any exposure to China or tariffs per se, because they just run a marketing company where everybody just uses their app and they run ads on there. So I like that they're insulated from that. Unfortunately, they weren't insulated from the one big beautiful bill, which took the stock down. And then they also have a capex kind of, I won't say a problem, but Meta said on their conference call that, you know, they have to increase capex for their Meta super intelligent labs. I look at it like this: they have to defend their castle. They have to spend, invest, research and development, or else you're going to see the TikToks of the world and other platforms try to come in and take their lunch. If they can develop
All right, that's 5 minutes past the half hour. I'm out of here. Spread love, be good to each other. We got nothing. I'm sticking to my plan. Peace.